Good morning, everyone. Happy Monday. It's 7 a.m. here on the East Coast, July 29th. Prices of BTC currently at 9,465. Yesterday, I was waiting for this daily and weekly candle closing right around this candle right here on the 4-hour. We saw a lot of price action, but no follow through on either side. Basically, we're just moving sideways, but we did see a big sell come in right around this time, right maybe an hour before the daily and weekly closing, which was yesterday at 8 p.m. Eastern Standard Time, or I think it's 12 a.m. UTC time. Okay, so once we saw this selling happening, right, this previous block right here, this red block that you see, which is around $9,100 or so, okay, hit that same block and caught a lot of demand right here, and price pushed back up really fast. Okay, so what this kind of says is there's still a decent amount of demand left, or rather was left, and that got absorbed right up here, and prices closed basically where they opened for this candle. Right, and you can see after that we had slight follow-up, but then more continuation to the downside. Okay, and I would figure, yesterday, for the most part, I realized like there will be some demand left here. I just didn't know exactly how much selling was going to happen around the daily and weekly closing, so I didn't really want to gamble on that. So if you've been following my analysis in the Cryptosomniac trading view, right, I put up this analysis right here, Bitcoin analysis, that will save your account, and I put up a few trades for the free side of the community here and there, and you can watch them right here. I think I took one of these trades the other day and made a nice 3 or 4% pop right here, as you can see. See, that one was right there, and then this candle right here popped right outside from it. All right, so I made a nice 4.5% or so, and then after that, what I was really waiting for was another move to the upside for the retrace. Okay, so what I was hoping was from here, I thought we would move up here, tap this trend line, and then come back down. Didn't happen. Luckily, escape with a nice 1% gain right here yesterday for our community. So even if we're not able to hit our targets, we try to make sure to either go and leave the trade unscathed, or at least leave with a 1% or a couple percent gain. Okay, so you can see right here, there's my proof right there, sell price right there. Okay, all right, now we go back to the charts and we analyze after this selling that happened yesterday, what next, right? So I'm sure you're probably wondering that, what happens now? Okay, so let's get through the 4-hour first, and then I'll go through the daily and the weekly. Okay, so these higher low structures, right, these purple half circles right here that you were seeing, these were a positive sign. If we had printed another one like this up here somewhere, I would be really happy. But now what's really happened is we had this, or technically this. So this is done. All right, this is no more a higher low structure. It doesn't matter because the structure itself has broken. All right, now what we need to evaluate is with this demand surge that came in, since there's no follow through, it might be wise to presume that the downtrend continuation that's been happening for the past, let's see, from the beginning, or I'm sorry, the end of June 26th or so, will probably continue with lower highs, lower highs, lower highs, and probably, bleed on back into this block right here, and then probably eventually break it. Unless somehow, some way, okay, you could see over here, we tapped 11,100 and we made it all the way to about 11,200, right? So first step, what we need to do is we need to, after this bounce right here, somehow be able to crack these two, okay? These two double tops, lower highs right here, okay? So that's about 10,200, okay? So that's our first step. I'm gonna mark these out in blue so you can take notes on this, mark it down on your own chart. Okay, that is the first and foremost step that we need to get past to see that this 9100 bounce right here has some credibility. If we can't even get up there, I mean, it's pretty much over. We're probably more than likely going to go down 9200. If we can't even get past this wick right here, which is about 9725 or so, again, more likely we'll have downside, right? And actually, I'll mark out this one too. Okay, so I'll mark out that blue as well, 9725 or so. All right, so we need to first get over that, then get over that, and then get over this one right here. Okay, now this is the special marker right here. Why? Because if we are to assume that this is a double bottom like this, that went up like that and then came down again, if we were to assume this is a double bottom, the double bottoms are only validated when the high of the first bottom is taken out, which is right here. You can see 11,215. Let's just say 11,250 to be safe, depending on which exchange you're on. Okay, so until that happens, this entire structure can only be assumed that we are going to continue to the downside. Okay, now if you don't want to assume, if you don't want to be any trades, or you don't know what to do, you might want to just stay out in fiat and see what the market gives you. If it gets over this hump right here, say 9750 or so, you have potentially another possibility to get up to probably around $10,100, $10,200. So you could take a quick long from here. But again, you want to wait at least for, a 4 hour or a couple of 2 hour closings. So from here to here, that's about a nice, 4% move, right? If prices get from here to here and they close above 10,200, then again, you have another movement from here to here, which is about 9.2%, okay? So you have different levels, because remember how I explained that price moves up in stair steps, okay? At any point, price could actually come down, okay? And same thing the other way around. Price will stair step down, right? And at any point, price will just move back up. So if you want to be a successful trader, if you want to be able to not have to think about if price is going to do this or that, just trade the support and resistance levels. Trade the blocks where price previously stopped, whether it was because of support or because of resistance. And then you won't ever have to worry, all right? Because I think most people think that trading is about knowing where the price is going to go. But the fact of the matter is we can, predict with, well, not even predict, we can lay out the possibilities and have some prediction, maybe 40% of the time, maybe 30%, okay? But more importantly, you don't even have to worry about those percentages, because for the most part, if you just follow the technicals, the structures, and understand that you can't always be right in trading, more than likely you'll win more than you lose, because you'll just be following these simple rules, right? You'll follow the rules of buying support, selling resistance. You'll follow the rules of if this was 9100, right? So yesterday I wanted to take a quick long on this. I wasn't quite available to be able to do so, but all I did was I said, okay, price previously stopped here. More than likely, it's going to at least briefly stop in that same region, okay? I didn't know if it was actually going to stop, right? So it would have been like catching a falling knife, okay? Now, I don't really like doing that, but I knew for the most part that my probability is high that price will probably bounce here even just a little bit. I just didn't have time to take it. But if price had bled through this, right, my stop would have been just under this area. So from this wick just below it, so about say 9,025, 9,050 or so. Why? Because if I know definitively that I can never understand what price is going to do, right? I just set my stop just beneath the previous low and just see if this is going to work out. That's it, okay? So with that being said, now you have levels to watch out for, Okay. But for the most part, folks, I'll tell you one thing. I don't know if price is going to keep climbing back up. It just seems like some of the volume and money inflows into the different exchanges have been sucked out of the market. And I think I have a Twitter link for that. I'll post it up on my video, or we might go through it later. Basically, what I did was I found this resource. I think it's on tokenanalyst.io, and it talks about the different inflows and outflows of different exchanges. And what I've noticed recently is a lot of money has been pulled off the table from BitMEX and Bitfinex due to the fact that the United States Senate and House Judiciary Committees, they're starting to investigate them, right? So, it makes sense that those exchanges are going to be way more cautious, okay? People are going to be way more cautious, right? So U.S. Senate, House Judiciary Committees are, looking into those exchanges, and I would be very careful if you are on those exchanges, okay? All right, going back to the 4-hour chart, now we're just going to lay out the 50 and the 200 moving average, which is 200 is red, yellow is the 50, and here's now the pivot, which has moved from this area to this area, okay? So remember how I stated earlier, 9,725 or so, so you can see the pivot's just above that, right? So $9,800 or so. Price needs to get above 9,800 to be considered, to gain some momentum to the upside. And the 50 and the 200 are right above that too. So if price is truly supposed to break up and start showing upside momentum, it needs to break through this pivot, 9,800. It needs to cross these two moving averages, which are both crossed right around, 10,300, 10,400. Okay, so those are another, couple different points that you can look out for in terms of safe spots. Okay. On the daily chart, we are well below the pivot. I'm gonna turn off these moving averages, and I'm gonna turn these on right here, which are a bit more useful. You could see that the 21 and the 30 EMA are now close to about 10,200. Again, another reason why you can wait above this level right here, 10,200 or so, just to be considered as a safe long trade. Or you see this purple moving average that's coming up. This is the 100 moving average. Okay, the 100 moving average has been surprisingly very supportive in the previous bull run. Okay, so you can see right here, this is the purple right there. Okay, you can see right there support. Once it becomes resistance, flips back as support, support, support right there, support right there, support right there. Okay, so even this moving average right now is pretty important for us to look into as a next bounce area, and currently that is right around 8,800 or so. Okay, so if we just fell straight on through, that's where we would land. Okay, this 100 moving average. All right, the S1 on the daily is almost right around 7,500, 7,600, because this is where we stopped previously before moving on up from 7K to about 14K, right? So a couple different areas to watch out for too, right there. Okay. All right, now we get onto the weekly. Or also, actually, let me show you guys something on the daily as well. This is something really interesting on the daily. Let me take out this white line right here. Notice how from this point right here, this trend line, right? You had this touch right here, multiple touches right here. Notice how price went all the way up past this flag and then came back down to that same trend line of this big flag. I don't think that's a coincidence, honestly. I think this is, a well thought out trend line support, and price is at least temporarily bouncing here. Okay, temporarily. I don't know how long it's going to bounce there, but the fact that it's doing it right now is a good sign. Now, if it falls through, Then, like I said, things can get ugly. Then we have the sideways, big consolidation between 7,400 and all the way to about $8,600. Okay, in this range right here. All right. Now on the weekly chart, I had stated that the line in the sand for me was either we cross above 11,600 on the weekly, okay, or we break below this $9,600 area right here, okay. Either of which would trigger, if we close above 11.6, more upside momentum, or if we close below 9.6, more downside momentum. Okay, so the fact that we've done that, right? Because remember, after this weekly candle, once we closed inside this big range, we did not come back down into the 9.6 area 1, 2, 3, 4, and 5 weeks later. And on the 5th week, which was yesterday, we broke on through it. So I can only assume that there's still a good amount of sellers present in the market, okay? Or there may not actually be even that many sellers, but rather that there's just not enough buyers left, okay? Because people are saying that, oh, I'm gonna go for lower and lower prices, and so they're not buying, right? Or due to the fact that the one broker shut down by the FBI, this BitMEX and Bitfinex hearings, all this stuff sort of adds on to the plate of professionals and maybe smart money, and they may not want to risk their capital just yet to buy at these prices because they don't know the outcome of these hearings, right? So with that being said, they might just wait for the market to correct itself wherever it does, wherever it stops, and then if things are safe, then pick it back up wherever it stops. Okay, so one possibility is this monthly and weekly pivot, which is around 8,000 flat, and that's right around where the 21 EMA is. Okay, so that's again around $8,200, $8,000 or so, depending on wherever these two cross in the next week or two, right? So those could be some areas too to watch out for. I mean, a positive sign is that you see volume going down on the weekly 1, 2, and the third one, but it's also not really a good sign, in my opinion, that you see less volume in a bigger bodied candle right here. Okay, I was really hoping that we would stay above 9,600, but it seems like that extra push that we had yesterday really just slammed this candle down. Okay, so I think the weekly is still not looking good. It's not looking healthy, and like I said earlier, based on the daily chart, anywhere between 7.4 and about $8,600 is really your next potential stop, because this was really the order block right here before price just took off for like the next 4 weeks, right? So I would look for this yellow box again to potentially stop price at the very least, temporarily, right? So I'll be keeping an eye on that, especially on the weekly chart. But until then, I'm largely kind of just waiting it out in the market, catching quick scalps here and there. Some nice 1% gainers right here. I was able to short the market the other day. Again, like I said, I made a nice, long position right here, 85% gain. This was a 4.4% move. So because I was on Deribit, it was a really nice pop that I got. All right. Let's see. What else do we need to look at? Let's see how Ether is doing. ETH USD. Let's see. All right. So here's ETH USD. All right. Still hanging on to the... Let me see. Let me turn those off. It's still hanging on to this big trendline support right here. Okay. So touch 1, 2, and 3 and 4. I'm really not liking where ETH is at right now, especially at the critical juncture where Bitcoin is at. I would probably say more than likely if BTC keeps going down, Ethereum will probably just collapse too, probably to the next big support. For the most part, I mean, we have the critical support right around $200, but if that breaks, probably it'll go towards, I don't know, 175 all the way to potentially 150. Okay, so this is really that big consolidation area that happened and then prices popped, right? So I would be really careful on ETH right now. Again, if you're trying to look for levels to watch, I would at least wait for the climb above 240 or for prices to potentially drop towards 175, maybe towards 150. All right. So it's time to start being, excuse me, it's time to start being extremely careful on alts like this. All right. Because remember that the BTC dominance, like we'd mapped out, okay, like this, it's still very high. Okay. Bitcoin is just not letting up. I don't know what to tell you. This whole, alt season garbage that's been going around the crypto Twitter space, it might be completely off. Okay. Who knows? There may not be an alt season. Just because things have happened in the past doesn't mean they need to happen in the future. But then again, I guess you could make the argument that, that's what technical analysis is. That's what fractals are. But, to be honest, because Bitcoin and cryptos are on such a big radar now with, the U.S. Senate, the U.S. hearings, all over the world, the governments are starting to recognize, people are either making a lot of money or losing a lot of money. This asset class is now on the radar, and at the very least, the bigger institutions and funds and smart money have only picked up probably the best of the best assets. They're not going to, buy into some garbage coins, right? I mean, it's not their MO, right? So they're probably going to pick up things like BTC because it is what defines cryptocurrency, right? So with that being said, if they're picking up BTC, it makes sense that it's going to stay at a high Bitcoin dominance level, at a high market cap, and it's not going to go down anytime soon. But the alts themselves will probably just keep bleeding out. They'll just keep going lower and lower than most people can anticipate, right? So I would be really careful if you're in alt trades right now, folks. There may be opportunities to make money here and there, but if I were you, if you're seeing some opportunities to make a quick buck, quick gains here and there, that's all you should be hoping for. Don't hope for the 10x, 50x, 100x trades. All right. Just go for the easy, easy winners and, get in and get out. All right. Let me see. I wanted to check out the RSI real quick. Here's the daily RSI. You could see that the RSI actually finally broke on outside of this trend line, but didn't really do much. Came down again. A big marker for the RSI was this 47 points right here. You could see that it was support right here, support, resistance right around that area, support, and then RSI finally broke on through, couldn't climb up above it, and now it's breaking on through again. The next big support marker for RSI is right around the 32, 33 level. Okay, so that's a bit of a ways away. Price could keep falling and maybe even hit oversold territory on the daily, right? If it does keep falling, if price keeps falling. So keep an eye on the RSI as well, because again, like I said, 33 points or so is really the next big spot for support. If not, it's just going to fall straight through towards the oversold territory. All right, folks, come join Cryptosomniac. Hit products page, buy my technical analysis course if you're not seeing how to read these charts, how I'm doing my analysis work, how I'm reading volume analysis, price action, drawing these different trend lines, channels, everything that you're seeing so far. All right. I try to keep my analysis as simple as possible. As you can see, I don't have 8 indicators like most people do. my fundamental thinking of technicals is that follow the price, follow the volume, and follow the moving averages. Okay. And then you could start, I start using things like those pivots that you see, Bollinger Bands like this, volume profile, visible range like that. These are also helpful, but these are, again, all derived on volatility, which is the Bollinger Bands, and, sideways, horizontal support or resistance based on these volume profile ranges and these nodes. Okay. I don't have these fancy indicators that people use that they say and claim are very substantial in terms of buying and selling signals. I don't think those work, to be honest, but I do believe that if you use a lot of different, complex things in common, like volume analysis, price action, the Ichimoku cloud, Bollinger Bands, I think you will get an overall better view of what price could potentially do versus what the unlikelihood of it not doing, right? So this is why I have a lot of experience with a lot of indicators. If you guys want to learn that, and some of which I talk about in my technical analysis course, or you could buy Advantage after that and come join our Cryptosomniac community right here, where we are always up, always chatting, letting our community know exactly what we're doing, what we're thinking. And we have analysis like this that's also public, the Bitcoin analysis that will save your account on TradingView, or, this one right here. Let's see. This one right here, Bitcoin drops negative 30%, nothing we haven't seen in 2017. And then lastly, the bear versus bull case for Bitcoin. Right, you can read all about these on our TradingView account. Make sure you give us a thumbs up on this video or a thumbs up right here. All right. Well, that's it, folks. I hope you enjoy this analysis. You have some levels to look forward to. Be careful, be wise in this market. Remember, rule number 1 is capital preservation. Then you go to rule number 2, which is growing your capital. If you don't have number 1 locked down, you can't have number 2, right? All right, folks, take care. Cheers. Have a wonderful Monday and a great week ahead, okay?